Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do one question covering variety of ratios of typical nature when we have got total details relating to balance sheet and income statement. Let us proceed with the sum. Mr. Zoglikar desires that you should compute the following ratios for financial analysis. Workings should form part of your answer. What do you mean by this line? Working should form part of your answer. It means that whatever working notes we do for solving the sums, all those working notes should be done along with the answer there itself. It should not be done on some back page and getting the final answers in actual solution. We are required to do all working notes as a part of answer. Return on capital employed, that is return on investment, gross profit ratio, stock turnover ratio, current ratio, debt equity ratio, operating ratio. The figures are as under. All figures they are given in thousands. Sales 16,000 thousands. Raw material consumed, this will be part of cost of goods sold. Consumables, cost of goods sold. Direct labor, cost of goods sold. Other direct expenses, cost of goods sold. Administration expenses will be part of operating expenses. Selling expenses, this will be part of operating expenses. Interest, its finance cost. Fixed assets will be part of balance sheet. Sources of funds, application of funds. Here in application of funds we'll have fixed assets. Income tax 50%. Depreciation 700. Share capital will be part of proprietors fund, shareholders fund. Reserves and surplus. Term loans will be part of borrowed fund. Unsecured term loan will be part of borrowed fund. Trade creditors, current liabilities. Investments, long-term investments. Inventories, current asset. Receivable, current asset. Cash bank, current asset. Provisions, current liabilities. Other current liabilities, current liabilities. As a part of working note, we are required to prepare vertical balance sheet and vertical income statement so that we can calculate all ratios quickly and correctly. Vertical balance sheet, first part sources of funds. There will have first shareholders fund. In shareholders fund first we have share capital. Share capital, here we have 5,000 thousand. Reserves and surplus we have 1,500. This will be added to share capital. So total shareholders fund we got 6,500,000. Next we have borrowed fund. There we have two types of loan here, 12,000 and 1,500,000. So total borrowed funds are 12,000 plus 1500, that is 13,500,000. We have recorded shareholders fund and borrowed fund. We can add them to arrive at total funds employed. We got total funds employed 20,000. Now we can calculate application of funds. Fixed assets we have 14,000. Long-term investments we have 400,000. Next, we are required to add working capital. There first we have current assets. In current asset we have inventories, receivables, cash bank balance. Inventories means stock 6,000. Receivables means debtors and bills payable. It is 3,700,000. Cash and bank balance 100,000. We can add now all current assets. It is 9,800,000. Less current liabilities. Here we have trade creditors 3,350,000, provisions 650,000, other current liabilities 200,000. Current liabilities 4,200,000. From current asset we'll deduct current liabilities. So net working capital is 5,600,000. We'll be adding fixed assets, investments and working capital. So it is tallying with total of source of funds 20,000. So application of funds we have 20,000. Here first we have sales 16,000. From sales we are required to deduct cost of goods sold. Here we have raw material consumed, consumable, direct labor, other direct expenses. These will be added to arrive at cost of goods sold. Cost of goods sold, we have to take total of this 9,830. So we get gross margin or gross profit 6,170,000. From gross margin we have to deduct operating expenses. We have administration 1200, selling 260. The item of depreciation will be also covered in operating expenses. It is 2,160. Operating net profit 4,010. There are no non-operating incomes or losses. So we can proceed for the next item, that is finance cost. Here we have interest 1,440,000. So we got, after deducting interest, net profit before tax 2,570,000. Here they have said income tax 50%. So it is 1,285,000. So we got net profit after tax 1,285,000. We have completed vertical balance sheet and vertical income statement. Let us calculate various ratios. Return on capital employed, that is return on investment. Formula is profit before interest and tax divided by capital employed multiplied by 100. Profit before interest and tax is 4,000, 10,000. Capital Capital employed 20,000. So it is 20.05%. Gross profit ratio. Gross profit upon net sales multiplied by 100. Gross profit 6170. Sales 16,000. Gross profit ratio 38.56%. Cost of goods sold we have 9,830. Stock turnover ratio is equal to cost of goods sold divided by average stock. For average stock we read opening stock plus closing stock divided by 2. If opening and closing stock details are not there, we can take closing stock as average stock. Inventories 6,000. So we got stock turnover ratio 1.64 times. Next we have current ratio. Formula is current assets upon current liabilities. Total current assets 9,800. Total current liabilities 4,200. It is 2.33:1. Next we have debt equity ratio. Borrowed fund divided by shareholders fund. Shareholders fund 6,500. Borrowed fund 13,500. It is 2.08:1. Operating ratio, cost of goods sold plus operating expenses divided by net sales multiplied by 100. Cost of goods sold 9830. Operating expenses 2160. .94%. In this question, we have understood how to prepare vertical balance sheet and vertical income statement as a part of compulsory working note to be shown along with the answer as per the requirement of questions asked at university exam. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.